Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves one question: what happened today, and what does it tell us about the coming days? I do this show 4 times a week, Monday through Thursday. Broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. You can get it there. And I welcome you to share it with others and show people what we're doing here. Today we had another big spike up, and I'm going to start with this chart. This is what we were looking at last night. I just want to kind of finish this off today. When we looked at this last night, I was telling you what this setup was, and that more than likely we would probably get a push today higher. It was a clean setup. You don't usually get them this clean. And looking intraday, you could see something that you couldn't see on the daily charts as of last night. It did get that spike. Of course, it did spike up over. Never looked back. The open was, what was it, about 20 points higher this morning, the opening. So it was opening up around 45. That push got it into this bar, or almost into that bar. Let me put it on the 15-minute. That's what we were looking at last night. That push got it into this bar, which said it was going to try to take it to the top. So the top of that bar is where it got. That's where it found a little resistance, right? 3 bars. Gets over it, comes back, does a retest. Can't get under it, and just, slowly works its way up overnight. I said we were probably going to try to get to that swing point high. This one here. The top was 20.6230. We closed 20.6214. Doesn't get much cleaner than that. Here's the ending numbers: 323 up on the Dow, 17,907. The S&P's up 36. You can read the numbers. Basically up 1.75% up to almost 2%. NDX got the big boost today off of Apple. There was word that Apple's wallet is the iWallet is doing well. I think I saw that, I don't know, one of the stores was talking about it. I forget who it was now. But I think that was part of the juice behind Apple finally. And Apple's just been wallowing around waiting, for something as it comes into this earnings season. If we pull Apple up and look at it, you can see the nice big spike up here. Pull this back, put it on the 3 months. The key spot here was getting back into this bar. It's into it. If it can hold it one more bar, I would think you'll go after the swing point highs. There's 2 of them. If you get past those, that's probably going to juice it right up to the top. So that's Apple. It's looking pretty good at this point. Elsewhere, gold down. The bonds got smoked back down 1.7, 1.32%. These are huge moves anymore in these various, I mean, the volatility is high. It was a big spike on the way back up. If we bring that back up and pull the bonds up, it was a huge spike on the way up, right? Just like it spiked back here. This time it doesn't have quite the volume, but it's a big spike up. That's kind of a, blow off top. It looked like, last night it was interesting because it looked to me like it had tested on lower volume, was going to try to push higher. But you got that gap up today. This thing never could find itself and just worked itself lower. It's going to come back down, do a retest regen. Our favorite friend, right? The retest regen. So that would be bullish if it does and holds, right? And what's really interesting here is if you pull this across and think about it, you've got the intersection of these two. That's going to be very hard to break down. That should be very hard to break down. So if this thing just comes straight back, right, over the next 3, 4, 5 days, whatever it is, and works its way back into this price zone, right, back into here somewhere, that's a sweet place to pick it up, right? Your risk is fairly low. In other words, you're really saying this is your risk at worst. More than likely, you get some sort of bounce out of here, and then you can put your stops up higher or maybe even at break even at that point. Right? Probabilities are pretty high. I mean, you got everything working for you. That's the kind of setups you have to watch for. And one thing I talk about elsewhere, and I'm sure I've talked about it here, you want to try to find the highest probability, you know, a lot of people talk about risk reward. You know, they do the risk reward calculation. Okay, it's a 3 to 1. Okay, that doesn't mean anything unless you know the probability of success. I mean, I can give you 3 to 1s all day. If the probability of success is 20%, who cares? I'm still going to lose money, right? The probability of success has to be high as well. And if the probability of success, if you can measure that with any degree of accuracy, then why wouldn't you put lots of money on such a trade? Let's say our probability of success is, you know, I don't know, 82%. Well, I'd be socking money in that all day long, right? Every chance I get. It's like doubling down on a nice, you know, card on your blackjack table. You know, you have to find places that you can put money on the table and have the odds in your favor. That's the whole point of the game. Otherwise, you're just sitting there, right? You're just doing what everybody else is doing. So anyway, a little digression, I guess. Going back to here, silver down, bonds we talked about getting smoked. The big thing today to me was this oil market. The oil market, you know, is up 1%, but I mean, we're basically flattening out up here. And it's 2 days in a row now. Let me put this up. 2 days in a row now, it's holding here. It hasn't been able to get back over this top. It's got to do that. And what I'm talking about is, what is that number? 1870. You need to get back over 1870. You know, it tried yesterday. It's sitting right up underneath it tonight. You know, if it can get over it tomorrow, that means it can bounce back up and do a retest and probably regenerate lower again, a bearish one. But that would give it a nice bounce. And if it gets a nice bounce, that gives this market time to work itself higher again, right? Because so much of this sell-off over the last, you know, both here and this huge drop back here, when did the market start selling off? Well, it started selling off when oil started breaking down in a big way. That was here. When did it start selling off this time? Well, when oil started breaking down again. It's the same, you know, both times it's the same sort of thing, right? You know, the pressure is put on this market as a result of oil breaking down. And was it here or was it up here that prices? That's in late November, early December. Let me pull the SPX back up. Maybe I'm telling you wrong. Late December. Yeah, well, it was actually about the 8th. If I go back over to oil now, the 8th was, yeah, it was out here. So it was about where I said it was. So anyway, I think oil has a lot to do with it. You know, the value or the goodness of lower oil prices. When any commodity is plunging, and especially if it's widely used, and we're not talking about like cocoa. Cocoa is going to, you know, affect those in that industry, Starbucks and a few others, but you know, it's not going to affect the whole economy. Oil does, and when that thing starts crashing down, it has wide-ranging effects. And so, you know, that's what's driving this market, and that's what's, you know, eating at it. Is the uncertainty caused by this in terms of debt structures and so forth. All right, let's look at the indexes. So we know we got a big bounce today. What does it mean, right? Can we keep going? First of all, I'd call your attention to the volumes. They're not huge, right, as we come back up. If you remember last night, we talked about, I believe it was last night, we talked about this bar being the key bar. That's where all your volume is, right? And not just that bar, but that's where these breakdown bars was from before and the bottom of this one. And so this particular area is the area where if you're going to see sellers show up, this is where you would expect them. If you look at the top of this bar, the bottom of the big bar, that price point's 2061.03. We close at 2062.14. So we just barely get into that bar. Tomorrow you got the employment numbers. This market is set up to try to spike even higher. the way it has set, but it's already made a big move. I mean, we came off the bottom 1, 2, 1 point, almost 3%. So you're 3% off the bottom. Now, this thing can jump another 2 or 3% if these employment numbers are, good numbers again, and just not, wildly higher, because wildly higher gets you worried about interest rates. But good numbers, good solid numbers again. You've got earnings coming up next week. This market could spike a little bit higher and get into this bar and stay into it. And if it does that, I suspect that's going to tell us, the top of this bar is 2077. If you get into this thing 2065, 70 or something, or 2070, this thing can climb right back to the tops again, right? There's nothing to stop it, and there's no volume up there. It can blow right through them. So, I kind of like the way this thing is set up. Do I think it's going to break out tomorrow? No, I think you actually got a better chance for this thing maybe to get a spike in the morning and then some selling. And you get a little ABCD back down, and then that would potentially set up the push to the top side. And so if I'm thinking about it, maybe you get up into there, get some sort of a small pullback, and then get your setup to take you back up to new highs. That's kind of the way this thing looks like it's trying to set up to me, get you back over the highs. But, as it is, we'll see. Right now, we know two things. We know that we got into the bar today. We know this is where the selling should show up. As we looked at before, our retest, regenerate previously off this bullish high was way up here. If you get back over your breakdown bar, which is there, right, you're definitely going to new highs. If you just get up into this high volume high and stay into it, I suspect you're going to at least test that top. And if you get that close, you're probably going to break it. So tomorrow, Monday, those are the key tests. Can you get up and in it? Don't discount earnings, though, because if anything, the earnings have been pushed down again, right? The bar is very low, and these earnings can spike higher. And I wouldn't be surprised to see this market try to rally on earnings. It got the nice big pullback here, and now they're pushing it back up in front of those earnings. I expect that they're gonna, try to push it on earnings. So, to me, the setup's pretty good here. We still got a little bit more work to do to tell us that it's going to push higher. Looking at all the other indexes, there's really nothing on any of these to tell us much of anything. They're back up into areas that show strength, but I think the S&P is the one that's telling us the most at this point. Okay, I was going to go over to world markets. And what I wanted to look at here was, we all know that the third week of this month, so basically 2 weeks from today, is when the ECB is going to do their thing. And we already saw how the continually that euro keeps getting pushed lower and lower and lower. If I pull it back up again, you can see it spikes down again today. And if you put this, I'm going to bring it all the way back to a monthly, because that's where it's trying to break these out and hold them. On the monthly, it's underneath these lows. We've got enough time in this month that it can pop back up. It certainly isn't going to have the volume, but right now it is breaking the last of lows. And I had talked about this some time back that if we broke under about 118, and I believe this low was 118.79. If we broke under about 118, that more than likely we're going to go to par. Well, we're at 116. Now, I'm starting to think we're going to go to par. I mean, that's the way this thing is setting up. But I don't think you can make a straight move to par. You got to get a bounce somewhere. And it looks to me like what's going to happen is this thing is either going to flatten out here or be so stretched by the time the ECB says whatever it says that you're going to get a heck of a bounce back up. And so, I know that there are a lot of people playing this. I've talked about it enough. All I'm saying is, when you get this stretched, you either have to take a little of that money off the table, stuff it in your pants, or, do like some people and just double down and go crazy. I'm not the double down go crazy type. So if you're wondering what I would be doing, and actually what I have been doing, and that is I'm taking some profits on the way down. But a lower euro, and what got me over here on this again was, or is, stronger for the indexes, because it makes those equities more valuable, right? The euro, the euro has less value, so if the company is still worth whatever it was worth, then it's going to take more euros to get it. And so that typically is, I mean, that's what all these currency wars are about, right? That's why Japan is devaluing. That's why China does it. That's why Europe's doing it. You want to make your stuff cheaper. And with the floating currencies, you can slowly just kind of float things around and everybody can get the benefit. And that's kind of the way this thing's working. When nobody, in fact, is doing anything different, you're just devaluing all of them. But if they do it in stages, right, one looks cheaper at a certain period of time. This is going to go back and it's certainly going to test here. And it looks to me like it's going to go back to test the highs, probably in time for Draghi's decision. If we look at the CACs, with all the mess that happened with the terror attacks over there, the CAC still presses higher. The FTSE pressing higher. All these look like they're going to go back to test these swing point highs. And I don't know if these others will, but Germany looks like it's going to go back to test the highs. So those markets still look pretty good. If I look over at Hong Kong, tonight it looks like Hong Kong's up. And, potentially it can get an ABCD structure if it can get some volume tonight and get over this high. But in general, the point of coming over here is that most of these markets are working back towards their highs. Here's the Taiwanese, the Indonesian market, even the Japanese market is trying to make a march back up now. So overseas markets supporting some sort of a push or continued push, at least to get back and test some swing point highs. The only thing I saw today that I didn't really like is I didn't see as much strength as I wanted to see in the sectors. I'm going to show you the strongest ones. Here's the XLY looking pretty good. XLV definitely looked good today. It's back at testing at swing point high. XLU couldn't move, but that actually is probably what you would expect with the market strong. XLP, XLK, all of these look pretty good. Now the XLK, of course, is way off. It had come down and tested that low like the NDX did. And then we get into the more problematic ones. XLI, it's an okay bounce. The XLF earnings are what's coming out next week. XLF got a decent bounce, no volume though. I look at these, I don't see really any kind of, willingness to really buy these things up. XLE got a decent bounce. What was it, up about 2.2% today? I just don't see money pouring into these. But then again, it's not, does it pour in today when it's coming off of a low, right? It's what does it do when it gets to something that means something? And right now we're not there, so you can't really tell. So I don't want to discount this too much, but I wasn't overly impressed with the sectors today. So my synopsis here after a long-winded talk is, I suspect that tomorrow you're going to see this market maybe get a pop-up off those numbers and then probably sell down a little bit by the end of the day. So you might see a little red tomorrow. As far as other things, let me see here. I've got some questions. Let me tackle at least one of these. So there's many breakouts today. Could you look at BSX? Boston Scientific. So yeah, there's a lot of breakouts today. It's like you look like a genius if you bought anything the last couple of days. BSX, okay, yeah, nice big breakout, and this broke out everywhere. I'm looking across at the rest of these, the weeklies. Nice breakout across multiple swing points on the BSX, and then on the monthly here, also looking pretty clean. So let's see here. If we go So what's the question? Do you think this move is done, or can I buy some of the daily if it retraces back to the breakout area? I don't think it's going to retrace back to the breakout area. Your retrace is going to come back on the weekly, not the daily. 1408. So anywhere from 1408 around that area is probably where I'd be looking. I don't think you'll get back down here. 1376. Yeah, I don't think you're going to get that low. I think 1408 is where you have to start. So yeah, it looks great. I think it's going to go farther. And as a matter of fact, if you pull this over, let's do the ABCD, which is what you're really asking. It looks huge to me. 11, 10 to 13. So that's 260. That gets you to 14, 15, 10. So, this thing may run up to 1510 before it even pulls back. You're just going to have to wait on it now. So that's the way that one looks. Let me see what was the other one here. The other one was Micron Technology. Let's see what Micron looks like. So Micron reported after the bell yesterday. Broke a swing point low. And let me pull this weekly over. So to what is today? Thursday? So it's not going to have the volume. Yeah, it's not going to have the volume on the weekly. This is this is going to hold. They tested down into this big bar and just doesn't have the volume. And so Micron looks to me like it's going to hold. So the question here is, the question is it a buy? I never like high volume lows like this, but when you look at it in the context of the weekly, I think it looks okay. I just think there's better buys out here than this one. I don't know that I would be trying to do anything here. This to me looks like it's just going to range trade for a while. And there's other things that are doing much better than range trades. Okay? All right, I'm about out of time here. I do appreciate you joining me, as always. Check us out. I was talking last night about the referral program we have here at TA Today. And for anybody that didn't see last night, I'll repeat it again tonight. And that is, if you come in here, there's where is it here? Earn free services. You can refer a friend, a family member, or anybody that you think could benefit from this service. You don't have to be a member to do this. You can just be a visitor that's using the site and would like to see more of it and would like to see it for free. Refer somebody. Get somebody to join up. If they join up, you get it first 3 months for nothing, whatever they join for. So, I would encourage you, if you like what I do, if you think what I do is pretty good, tell others. See if they like it. If they end up liking it and joining, get some service here for nothing. As always, I appreciate it. Take care. It was a good week. We had a really good run this week. I'll see you Sunday. Good night, folks.